Yeah, morning traders. We continue to trade this growth thematic, this idea of a growth slowdown potentially leading to some sort of recession. And people are rotating those portfolios and building on some of the momentum moves we've been seeing. Yeah, European PMIs were a little bit worse than expected, and we've certainly seen some good buying in European government bonds, certainly in the bund complex. Twos were down 25 basis points, 10s down 21 basis points. We've seen euro dollar trade a range of 105.75 down to 104.83. We're sort of back above the 105 handle, trading mid-range at the moment, but certainly there's been some volatility there. The DAX was the worst performing European market, down 1.8%. Going to the US, we were focused on the the S&P PMI numbers, which fell 4.6 points to 52.4. Is that a precursor for next week's more sort of big material ISM manufacturing number, where the market is expecting that to come at 55.4? Perhaps. Certainly the Korean 20-day export numbers are suggesting there's downside risk to that, and I think the market's front running that as potentially being a weaker number. Now, where have we seen this manifest in markets? Well, we've certainly seen the Japanese yen being the best performing currency. We've seen some good short covering coming through as we've seen front end US Treasury yields finding good buyers. We've seen yields moving lower across the curve, and that's incentivized people to buy back some of those short yen positions we've been seeing. But apart from that, it's been a fairly mixed picture across the sort of G10 complex. We've seen commodity prices once again under pressure. Certainly copper getting a lot of attention, down 5%. It's a material move there. So that's down, at 3.75 a pound. Nat gas is getting badly beaten up, about 9% lower. We're seeing crude trading 107.05 to 102.32. We're trading at the bottom end of that range, but everyone's asking, are we going to see $100 there? You can obviously go into the equity market. It's an interesting one because we have seen some equity buyers playing through. We have seen the S&P futures trade above 3,800. They've just come back a little bit there. There is some gains playing through, but people are rotating once again out of material stocks, out of energy stocks, into REITs, into utilities, into staples, into those more defensive areas of the market. So it's not an all-out risk aversion move, but people are just rotating out of those cyclical sort of material space. So something we are watching, and we should see a fairly mixed picture when Asia comes under pressure. We're calling the ASX fairly flat, but better days probably from seeing in Japan there.